Will oil be $100? Next on the Energy Newsbeat Weekly Stand-Up Recap.
Israel targets Iran's South Pars field in escalating airstrikes. Iran retaliates. Michael, I'm having a hard time getting a nail down on the damage, but let's go through this. According to the IRGC affiliated media and post on X, the attack targeted critical infrastructure in Phase 14 of the South Pars field in Bushehr province, causing fires, prompting an immediate response from Iranian forces. This is incredibly significant because this also ties to the Leviathan field in Israel has been shut down, and that Leviathan field in the Mediterranean is causing Egypt a gas shortage. Now there is going to be a huge impact to LNG exports from Qatar that is going to be impacted on this. So there's 78 deaths and over 320 casualties so far. And again, we're not on the edge of that kind of news. We're here to cover the energy side of this, and the operators in the South Pars gas field, Petropars, a leading NIOC subsidiary development and production at Phase 14, Iranian offshore engineering and construction, the IOC handles the offshore platform. This is going to be a huge issue as it settles out.
It's going to be unbelievable. I think everybody who's in the oil and gas business saw what happened to oil Thursday night when this all took, or I think it was Wednesday. Was it Wednesday or Thursday night? I think it was Thursday.
It's starting Wednesday night and Thursday, and it's about another 2 weeks it's going to take to isolate out. I saw General, I believe it's Keen on Maria Bartiromo this morning on the Sunday show, or when we filmed this is Sunday. And he was basically saying that they are going after the energy. If he says they're going after energy, the oil and gas depends on how far they take it out. The automakers pivot to hybrid sales as EV sales lag behind expectations. Will the EV market bifurcate into Tesla versus all the other hybrid? I think your points are spot on, Michael.
Yeah, let's just jump to that one. Let's go.
Let's go. I'll tell you, I wrote this one and it was a lot of fun. And when you sit back and take a look, EV sales are in the market now. Listen to this. In 2025, Q1, ICE sales are now 78% of the market. That's down from 80%. And where is it being picked up from? Hybrid sales. Hybrid, I did not realize, was really starting to kick in into the millions of units. In 2024, hybrid sales was 1.5 million units. ICE sales was 12.6 million. EV was 1.2 million, or 7.7%. Hybrids 9.6, and the ICE was 80%. Now you're looking at hybrid sales at 13 and EV sales are still at the 7.9%. So I think hybrid is just now gearing up.
No, I completely agree with you. And I mean, that chart you've got in the article is kind of crazy. And we've been on this for a year now. We've put our stake in the ground. We believe hybrids are going to outlast EVs from the standpoint of it's what a battery is designed to be, a backup power, and it's what a hybrid is. It's backup power. It increases your fuel efficiency so you can get a lot more miles out of a single tank of gas. It allows you to be less harsh on your engine because you're able to do a lot of other things that are very interesting. So I mean, we put our flake in the ground. Now, luckily, the data is rolling back in, and the cost of an EV is a lot higher than your cost of a hybrid.
Exactly. And I added in here because I've been looking at day trading on Tesla, and I think that Tesla is still going to be a great buy. I don't give investment advice. However, Tesla is not an EV company by itself. I think they will be the sole U.S. manufacturer of 100% EVs. I think they're going to be the last man standing.
Don't take your day trading advice from Stu. I promise you that.
Rystad oil prices to remain below $80 despite escalating Middle East tensions. I think Rystad has the same idea on this story, is that they're seeing that everybody is wanting to shut this down except Netanyahu and Israel. So I think the whole rest of the world wants this thing shut down. And I couldn't agree more. But I'm rooting for the Iranian people to have a regime change. I want to be honest with you. Let's get rid of the clerics that have been bugging us for 40 years and get a regime change by the people, not the CIA.
Yeah, I mean, I tend to agree again with Rystad's analysis here. And I think the funny part is, Stu, you were the one calling for $80 oil, and yet you're agreeing right here with Rystad. But I think what this means, from an investment standpoint, this is why gambling on tensions and war and things that are geopolitically out of your control is a bad idea, because you really never know where they'll go. On Thursday night, everybody thought oil was going to go to 100. As it sits today, I mean, we'll cover this. Oil's actually now dropped below 70, reopening after the market rollover at 415. And we're now in a standpoint where, well, we may actually just be back down to 65, because it is what it is. Iran is scared. Nobody thought that on Thursday. So this is where, as if you're an investor and you're trying to weigh geopolitical risk, it's easier to just price out geopolitical risk altogether than it is to try to gamble on, oh, well, it might be 70 if war breaks out. That's it.
Right.
I mean, first off, that's morally, that's a little weird to put in there. But second off, there's just no way you're going to be able to do it.
No. And when I look at well economics, that's what I look at. And then when you take a look at the amount of investment that is still needed, Michael, and then you look at demand, there's a magic formula. And for our reviews, well economics makes a difference because it tells you where you're going to drill. Total Energy explains Malaysia with Petronas deal. Michael, this story is important for a couple reasons. And you take a look at TotalEnergies, as we say here, yes.
Oh, it was TotalEnergies.
Oh, TotalEnergies. I was like, did I just poop under rug? Oh no. So net income was 42 billion, down from 5.1 billion in Q1 of 2024 due to lower oil prices and weaker downstream performance. And you take a look at how they've taken a look at this. Why are they expanding out? Oh, wait a minute. TotalEnergies, Shell, and BP are following in the footsteps of the U.S. oil companies, and they're going after a bigger market share around the world, and they're expanding into Malaysia to get money back into their thing. Because, Michael, remember the European countries took a left turn to the renewable energy market, and they failed. And so they're trying to get their money back. And now when you take a look at why this is really good. The update from LNGprime.com, under the deal, TotalEnergies will hold alongside Petronas its wholly owned subsidiary, Petronas Cargale. I hope I got that right. 50% of operating working interest in blocks SK301B and SK313 were significant gas discoveries.
Ooh. Well, I mean, it's what you're seeing is the expansion into specifically LNG has been critical. And that's where all of these super majors are going. I mean, think about, we talked about yesterday, what's really the prized asset that BP has that Abu Dhabi National Oil Company is looking at? They're looking at the gas assets. Why was TotalEnergies interested in Malaysia? Well, their gas assets or their gas assets specifically through Petronas partnership. So, I mean, the world is moving towards LNG. And again, as a capital allocator, you need to understand that if you're investing in heavy oil prospects, you need to understand what that means for you. It means it may mean that the divestiture market is weakening. Now, that's on a global scale. If you're looking at equities, obviously when you get into individual deal by deal, it's a little bit different. So that's great.
How the Israel-Iran crisis is swiftly becoming a Taiwan national security crisis. This is huge. You heard Michael and I talk about the Strait of Hormuz, a global energy lifeline. It's the narrow waterway between Iran, Oman, and the United Arab Emirates, is on the world's most critical oil transit choke point. According to the U.S. U.S. Energy Information Administration, the EIA, approximately 20.9 million barrels per day of oil and products, representing 20% of global petroleum liquids consumption, passed through the strait in 2023. Additionally, about 20% of the LNG trade goes through there. That is huge. Now, why is this important to Taiwan? And the story points that out. Taiwan, which is nearly all of its energy is imported. They have very little energy manufacturing, is very like open season on this because over 40% of its crude oil imports and significant portion of its LNG, primarily from Qatar, pass through the strait. But here's where this story gets dicey. At a World at War post on X, China is preparing for an invasion of Taiwan. It's a pretty big allegation, but they keep going into some more here. The U.S. will soon be involved in the conflict against Iran. China will see this as a major provocation. Why? And they go into what we've talked about, and that is China is Iran's biggest oil client, with the country's private refiners buying most of Iran's sanctioned crude. So this is huge. If the U.S. or Iran stop the crude, China's going to get grumpy and they're going to possibly act on Taiwan. So this is actually a huge issue for President Trump. And I have no doubt that they're going to be able to negotiate this through this. But global and regional implications underscores the interconnectedness of global energy markets and geopolitical flashpoints. For Taiwan, the immediate risk of an energy supply crunch, but the longer term threat lies in China's potential to capitalize on regional instability. And with the U.S. Nimitz coming from the Asia market over to this side of the pond, you're going to have some issues going on. So it was a pretty interesting story. China's death grip on rare earth minerals, regulatory hurdles, and the U.S. processing efforts. Trump administration gains investment opportunities. There's a lot in this story going on. And you've heard Michael and I talk about a stranglehold in the West, a real problem around renewable, not necessarily renewable energy, but just rare earth minerals and critical minerals. There's two different things, but they're almost interchangeable with some of them. China has 70% of its rare earth imports and domestic processing is virtually non-existent. The U.S. relies on China for 70% of our rare earth imports, and domestic processing is virtually non-existent. Gallium is the only one that's coming online to be able to produce, I believe, 50% of what we need. That's one out of all the different minerals that we need. The article outlines out regulatory hurdles in the United States, permitting delays, environmental concern, lack of expertise, rut-row, economic viability, thin profit margins, and China's ability to suppress global prices deter investment. I think that this is critical, and the way things are changing, and we're seeing that the Trump tariff wars actually did not turn out to be a bad thing. And President Trump and Scott Bessent actually did a phenomenal job in getting it to this point. Hats off to the Trump team on doing that. So I would take a look as an investor at the markets, and I've got some other investor CEOs that I've lined up coming up to talk about rare earth minerals, investing in a rare earth, and also in other commodities. When we take a look at the administration gains, the trade deal with China in June announced a tentative agreement to resume the talks. Executive Order 14241, this streamlined permitting for domestic minerals and projects. So they're on it. It invoked the Defense Production Act, the DPA, to fund mining and processes. That is huge. Getting us tariff exemptions on this. I have to hand it to the entire energy team of Secretary Burgum, Secretary Wright, and Lee Zeldin for really supporting President Trump through this thing. We take a look at the death grip on rare earth minerals, expose the West's problem, and closing the gap will take years to try to get this thing solved out. We don't have years. We got a year at the most. But sit back and take a look at your portfolio, and gold may not be the only one for you to break apart and take a look at your portfolio. Take a look at your portfolio and say, do I want some higher gains? Look at uranium mining or any of those other kinds of mines and say, wait a minute, this is important for this kind of sector. This is a defense need. This is a huge issue, and a lot of money can be made when you pick apart your portfolio and pick and choose in the rare earth minerals and production. Make sure you check the management of those companies, check their performance. Very much like the ExxonMobil CEO, Darren Woods, when he was on with Brett Baer. I put that article out on Substack this morning. Yes, so it'd be yesterday. He did an outstanding job. And as an investor looking at ExxonMobil, not only would I look at their buyback program or their fees back or their stock, whether or not it's a day trade or it's however you want to look at it. But the CEO is very critical when making a determination, and hats off was to Darren Woods at ExxonMobil. That was an outstanding interview with Brett Baird. That's on the energynewsbeat.substack.com. Go out there and check out that article.
The Senate caves on IRA wind and solar subsidies. This one is by the great friend of the show, David Blackmon, his Substack. Highly recommend checking him out. It's really interesting. I mean, if you go back and look last week, one of the big positives of the big, beautiful bill, outside of the fact that it would add $4 trillion to the debt. But one of the big positives of that bill was that they were really going to yank the wind and solar IRA provisions. And the version that was basically outlined by the Senate Finance Committee was very strict, or at least the one that got presented to the Senate Finance House Committee. The problem is the one that came out of the Senate Finance Committee basically sort of walked it back. So what specifically happened? So specifically, and I'm going to read straight from his Substack here, specifically, the Senate does away with the hard House provision that a wind and solar project must be placed into service by 2028, with softened language requiring only that developers, quote, begin construction on a site by 2030 in order to receive these subsidies. And to give you guys an idea, in reality, what does that mean? It means big oil and gas, big solar and wind companies like Ørsted, any number of these offshore wind and solar companies. All they need to do is make minimal down payments by 2030 to claim, quote, have started construction in order to then continue to receive the IRA subsidies and those tax benefits through 2040 without having to basically do anything and even kick up a pound of dirt. Unfortunately, so unless there's amendments, that's what's going to happen. I mean, it's unfortunately not good, because you can rest assured, and I'll just read now straight from the article here. You can rest assured, and you can be sure that in the 15 years between now and 2040, the wind and solar companies and their associations will most likely drafted this revised language and handed to a friendly rhino on the Senate Finance Committee, which will continue to spend millions of dollars with well-connected lobbyists on efforts to remove this absurdly soft fake deadline. He then goes to list out who are the people on the Finance Committee, and he does. I love this. He goes, if you're looking to rank likely rhino sellouts on this issue, I'd rank them as follows. Number 1, Texas Senator John Cornyn. Next, Oklahoma Senator and Chairman Subcommittee James Lankford, Kansas Senator Roger Marshall, and Montana Senator Stephen Dane. I love this quote. Senators Cornyn and Lankford are notorious wind shills, no less so shills for the solar industry. But it's pretty crazy what they want to do with this. I mean, basically, they're moving this deadline back in order to appease somebody. Who they're trying to appease? Well, obviously it's the wind lobby, and the wind lobby, which is funded by big wind, big wind, big pharma, big oil, they're all in there, big everything. But the point is, like everything that happens in reconciliation, we go for the moon and we end up somewhere down here. And to me, this is not good. You've got to go ahead and get that out of there, because everything needs to be on a level playing field. I cannot stand when people say, well, oil and gas has tax benefits. It has benefits. It does not have subsidies. Okay. What the IRA is subsidies. And there's a difference between a subsidy and a tax benefit. So if you want, call up your senator, make sure this doesn't happen. But, if this bill goes through, it may end up being where those subsidies actually stay in there. What's going on, everybody? Welcome into a special weekly recap edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous June 21st, 2025. It's been a heck of a week, guys. We had a great, oil prices out of control this week. We're going to be covering Iran, Israel throughout this whole weekly recap. We're going to sprinkle in some other stuff. The team is going to throw some of our top segments for the week, but holy smokes, guys. Unbelievable week. I'm tired. Appreciate you guys checking us out here on this Saturday. We will be back in the chair on Monday to bring you all the news. Quickly, guys, just again, check us out, energynewsbeat.com. Links to all of the articles in the description below. Timestamps are down there. Subscribe to our Substack, theenergynewsbeat.substack.com. We just released a great piece on what to look for as an energy investor. If you're interested in getting into the oil and gas business as an investor, highly recommend checking out that piece. It's going to be a great guide for you. Also, please visit RystEnergyConsulting.com if you need any help in the midstream space, guys. RystEnergyConsulting.com. We love them there. They've got clients from two guys in a garage all the way up to the largest publicly traded midstream companies in the world, so they can handle anything and everything you need. RystEnergyConsulting.com. Tell them Energy Newsbeat sent you. And finally, guys, if you are wondering if oil and gas is right to be added to your portfolio, we have a great oil and gas portfolio survey. Invest in oil.energynewsbeat.com or hit the link in the description below. It'll tell you a couple quick questions. We'll then send you an ebook on oil and gas investing. And if you look like you're a good fit, we will shoot you and get you in contact with the right folks to do that, guys. So really appreciate everybody checking us out here. I'm going to go kick it over to the team. We'll see you Monday, folks.